Real Estate and Mortgage Show, your go-to spot for everything home buying, selling, and financing on Newstalk 580 CFRA.
Welcome to the show, everybody. Not the nicest Saturday we were hoping for, but
still warm out.
Man,
we don't have winter coats on.
And
we're in January, right?
Well, that's a different voice we got going there. Oh, where's Paul Rushforth?
I saw some picture of him dressed up as Mr. Potato Head, so I don't know where he is, but where is he?
Paul's doing his movie, Toy Story 5 client event that we had this morning.
Wow, good for him. Success. And he dressed up as Mr. Potato Head. Perfect costume for him.
Such a brave man.
Perfect costume for him.
So in Paul's place today, we got Jonathan Hull from our office. Jonathan, welcome to the show.
Thank you.
So John, for those it's been a while since you've been on the show.
Yep.
So for the newer listeners, why don't you just introduce yourself quick and...
I've been with Paul for almost 4 years now. Jocelyn sent an email out thanking us coming from Tracy Arnett Realty over to Paul Rushforth Real Estate. It's been almost 4 years. It's been fantastic. I'm happy to be on the radio show with you guys.
We're glad to have you here, as always.
I appreciate that.
The show's always a little bit better when Paul's not here. So
yeah,
it's awesome.
Agreed.
It's awesome. But, this is one of the shows where I would have been okay with, since my voice is kind of not there. I figured, Paul just never stops talking. So today would have been the perfect show to give my voice a rest. We'll see how you do, Paul. The door's open for you to take it over, even though I know you're working on an offer, which has a 12 o'clock noon. So if you got to step out, you got to step out.
Appreciate that, Frank.
But that's what a dedicated real estate agent needs to do.
Deadlines are deadlines, right?
You got timelines.
Deadlines are deadlines. Yep. You got to deal with you got to deal.
It's a person's biggest purchase. So, they expect that kind of professionalism, and they expect you to be able to look after them in a timely manner. So
I appreciate that. I think that I'm going to be able to juggle the radio show and the offer.
Oh, don't worry. Frank and I can cover it for a few minutes if you need to step out.
No problem. I know Frank can cover that. No problem.
And Greg can too. Don't worry. Greg's a pro at this now.
That actually made me think of something, John, is that there's so much lingo in the business that maybe people don't understand if you don't work in the business all the time. And you're saying, like, you have an irrevocable on this offer at noon. What does that mean to somebody who's never done a deal before, or has been a while since they've done one?
That irrevocable at noon means it needs to be signed off. It's a good offer. My seller needs to sign off before noon, or the deal's dead. And that's pretty much all it means. Deadlines are deadlines. The only saving grace would be if we were countering the offer, but it was a good offer.
Yeah.
And it's not something that you want to pass up on. It's not something you want to play around with.
Right.
It needs to be signed off on before 12 p.m.
So that irrevocable, that's coming from the buyer side of things.
From the buyer side, it was a clean offer, very standard. It was a good offer number-wise, good closing date. Those are the two main things that we discuss all the time.
Yeah.
Standard conditions, financing, inspection. Those are the things that are going on right now.
Yeah.
But it's a good offer, and my guy needs to sign off before 12 p.m., and it's
40, 52 minutes. It's got to be signed, or the deal's done.
So
that's if that irrevocable phase goes over. So if it's 12:01, that means the contract's officially, like, the deal's void.
The deal's dead. I would need to counter it back. That's the only way that you could revive the offer, is what we say. If I sent it back with a counter, then the irrevocable doesn't mean as much.
But starts over. The clock starts over. So you set another time.
Exactly. But it's a good offer.
Right.
So it's got to be signed off on.
Is that something that's standard in a lot of real estate deals, is putting an irrevocable on the offer from the buyer side?
Yeah, absolutely. It's standard on every single offer.
Yeah.
It used to be there was a perception that you needed to respond by that in that timeline. So if you got an offer, if I got an offer right now and there was an irrevocable at 5 p.m., there was a perception that you needed to respond by 5 p.m. I mean, you're supposed to be in those timelines.
Yeah.
But if you want to counter the offer, you revive it, right? So if it comes back and I've got to counter it back at a number or closing date by 4:30 and give them a new irrevocable, it revives the offer. But when you get a good offer, it needs to be, that's got to be executed by the deadline.
You don't want to mess around with it. Exactly. If it's a great offer, you just want. So I guess a lesson in that is very important for sellers to be prepared. Like, from the moment their house hits the market, be prepared.
You have to be prepared. And most of the time we don't run into many issues, except when we deal with time changes. You got somebody out in Vancouver or somebody over in England, and there's a 6-hour, 3-hour time difference. It makes things a little more difficult. But the bottom line is if it's a good offer,
Yeah.
It needs to be signed off on.
It's got to be worked. And
It's got to be worked. It's got to be signed off on. And there's a lot of times that, and I know Frank's probably done the same thing, I'll work until 11, 12, 1 a.m.
Sure.
Because there's somebody else across the pond.
Yeah.
And it's 7 or 8 a.m. for them.
Yeah.
You got to stay. It needs to be executed by the deadline.
Right. Okay. No, cool. It's just it's one of those phrases that gets thrown around a lot, an irrevocable. So I just, I don't know that everybody knows what that is.
It's a different word, right? Irrevocable is a different word. Instead of using something like a deadline or a timeline, it's an irrevocable, and people go,
It's a very stressful sounding word, I have to say.
It very much is. It very much so is. It very much so is.
All right. So, Frank, this week, the U.S. Fed held.
Yeah, which expected again. I mean, there's talk that he wants to lower interest rates, but the data is the data. And even the new Fed chair has got to follow that data. He's got to follow a certain, what the principles that have been set out for hundreds of years on how to set their prime rate. And same thing here in Canada. So in the U.S., whether they like it or not, inflation's a problem. It's a huge problem. The fact that they had the conflict with Iran, which seems to be over, and we're seeing oil prices come back down. That's good. But those are going to take a month, 2 months to get through the system. So therefore, when inflation starts to hit 4.5%, 5%, there's no way that the Feds can lower interest rates. So they got to get that in line. Now, this new Fed wants to calculate inflation differently. But the facts are Americans are not happy right now. Americans are not happy paying $5-6 a gallon of gas. Americans are not happy at the cost of their food and their utilities and everything else that's gone up. So until that's put into place, I don't see the Feds dropping. I think they want to drop, but it's likely it'll happen in the fall. If this takes 2 months, if these oil prices take 2 months to go through the system, I wouldn't be surprised if August or September we see the Feds maybe drop a quarter point.
Right, because there's trailing on that data, right?
There sure is.
Like the data that's coming in today won't be parsed and whatever.
Well, it's from March and April, a lot of it, and therefore that's when the oil prices hit over $100 a barrel. So therefore we saw, the cost of everything go up. So very inflationary is what he did. Then, even though he doesn't realize it, he thinks it's not inflationary. Well, to billionaires and his friends, it's not inflationary, but to everyday people, it's very inflationary.
Yeah. If you've got deep pockets, you're not too fussed about.
You're not. Listen,
maybe you're putting off buying that new Ferrari until next week.
Or buying milk for $10 instead of $8 doesn't impact you, but it's nothing. It's pocket change. But for the everyday person that just barely makes ends meet, and that's the other thing is the employment report. There's more and more data that suggests that even in Canada, people are taking on second jobs. So as much as the job data looked very, very healthy last month, the data also says that there's a lot of people that already have a full-time job that took either a second part-time job, and some people even took a second full-time job, which seems crazy. So, but I've had a couple of clients that have 2 full-time jobs. They work 35 hours each job, 70 hours a week.
I can add to that, too. I've got 2 friends that I golf with, and they picked up secondary jobs. Not full-time, but picked up secondary parts. Just to make ends meet. Exactly. Absolutely. I've seen it in the real world. Absolutely.
Yep.
Well, so what's happening then if you've got people coming in and, like, again, we're in the wave of these mortgage renewals. Yep. What happens when people come in and say, Frank, like this rate you're offering me, I know it's the best you can give me, but these payments are going to kill me. You
got to re-amortize if you could. And I think we're still in a positive environment where most people that either bought their homes in 2021 or own their homes prior to 2021 have built up a lot of equity in those homes. So even if you bought a house with 5% down in the middle of 2021, the likelihood is that you may have the 20% equity or more in your home. So therefore, it gives you an opportunity to be able to re-amortize your mortgage. So if you started at 25 years, now you're down to 20, and your payment is $2,500, and now all of a sudden, because you're down to 20 years, the bank or the lender sends you a renewal notice with the higher interest rate. Now your payment's up to $3,000. You have an opportunity to be able to say, okay, like, how can I get my payment down to $2,500 because I can't afford $3,000. Reamortization is the answer, and some banks will let you do it, some don't. But just because whoever you're with, your bank or your lender, says no, don't stop. Get that second opinion. Get that third opinion. Just don't. Too many people trust their banks. And I think people need to understand that most banks do what's in their best interest, what keeps their shareholders. I was at a conference with a big bank last weekend, And they kept mentioning how we got to do what's best for our shareholders. We got to do what's best for our shareholders.
So they're just saying that.
Maximize
they're saying
profits.
it flat
They're
out.
flat out,
Yeah.
right? I have shareholders to report to. And knowing me, I put my hand up, and I know they cringed when I did. And I said, I think you guys need to understand that we're all business owners in here. So we have shareholders as well, which are our families and our staff. But our clients are shareholders, have shareholders too. They have their spouse, their kids. They're going to do what's best for them. So with all due respect, you need to understand that there's shareholders all over. You're not the only shareholder out here. So you're not the only one doing what's best for their shareholders. So, I think getting that second or third opinion, people are scared sometimes because if their bank says one thing, they think that's the Bible. That is the only way it's going to be.
It's written in stone.
It's written in stone, and that's the furthest thing from the truth because there's many clients that we help because their banks have given them poor advice or told them that they can't do it, and yet it could be done.
Right.
Just not with them.
Right.
That's all. Just not with them.
So getting that second opinion, it's worth it.
Second or third opinion's worth it. And it's not all about rate.
Listen,
the rate's important. But you need somebody to structure your finances properly and give you advice. The banks will give advice and make you think like it's okay to keep the credit card balance and line of credit balance because they're making more money on it.
Absolutely.
They're charging you 10%. Instead of saying, wait a second, you've got $30,000 in equity in your home available to you. Why don't we take that personal line of credit and credit card, put it in the mortgage, so that now you're doing it at 4% instead of 10%.
10 or 12 or whatever.
Because that's not necessarily in their shareholders' best interest, but it's in your shareholders' best interest. So again, do what's best for you. Get that second opinion.
What Frank just said is exactly what I recommend to my clients. They'll go to the bank, and what I always use is, and there's nothing wrong with the banks. Sometimes they treat you a little bit like a number.
The mortgage brokers most of the time.
Exactly. The mortgage brokers treat you like a person. They're there to look out for your best interests.
That's been your experience sending clients between banks and mortgage brokers?
I'll say that on both industries, though, real estate too.
Yep.
The really good real estate agents do not treat you like a transaction. They treat you like a person, like a human being, like a relationship.
Like John's here working his deal while he's on the show.
The banks, it's more transactional and more importantly, profitable transaction, where most brokers are not about the transaction. They're about setting up a relationship with you, so that they're their finance person for you, so you can reach out to them for any advice on finance. And they're going to give you advice that works in your best interest because they're not committed to any lenders whatsoever.
Couldn't have said it better myself.
Have a question, folks? Head over to realestateandmortgageshow.com and submit it there, and we'll get it on air as quick as we can. Or give us a call at 521-TALK, 521-8255. We'll be right back. Welcome back, everybody. Well, it's Jonathan Hull from Paul Rushforth Real Estate.
Appreciate that.
So great to have you here again, John. It's been a bit since you've been in.
I like coming in here. And slapping it around with the boys.
Yeah.
It's interesting on the break. He's working on that offer. That's awesome.
Yeah.
Deadlines are getting tight. Deadlines are getting tight here.
Got to get your vendor top dollar.
I was actually surprised you agreed to do the show today. I mean, it's summertime. Isn't this golf season for you?
I agreed to do the show. I like Paul. Yeah. I'd do it. I'd skip golf for the show. If I knew that this offer was coming through, if I knew this offer was coming through, I probably would have told him to show up. When
did Paul tell you last night at 11? Oh, by the way,
no, he was good. He was good. And you know what Paul was doing? Paul was doing the movie, the client movie today, Toy Story 5, down at Lansdowne. So that's a good reason for me to be here.
He's shaking hands and kissing babies as Mr.
Exactly
Potato Head.
Potato Head. Yep.
All right. So speaking of summer, so what are you seeing in the market right now?
It's picked up.
Yeah.
Yeah, absolutely. Since almost May. When the weather changed, but not even that. It's since May hit, it's been busy. And we had Sean Cathcart in this past week on Tuesday for our meeting.
Yeah.
And he showed the numbers. And I know we're on the radio and nobody can see the slides, but he showed it. That's exactly what's happened with the economy and the market. It's picked up since that timeline.
Different market though, Ottawa than other markets.
We are a blue chip market. We're in a bubble over here. A lot of it has to do with the government positions. There's always people coming and going.
Right.
And he mentioned that in the meeting that we had. He said, we're not Toronto, we're not Montreal, we're not Vancouver. There's us in about 3 or 4 other cities in Canada that operate as a blue chip market that are insulated from everybody else. But he showed it and he asked us, he said, hey, are you guys seeing the same thing? Yeah, we've been busy. Since May 1, and I know, Greg, I know as you've taken the photos, you're all over the place, right? And that's exactly what it's been. The market has...
And I only work on the sell side.
Exactly.
Right? Like I'm only photographing the listings that are going for sale.
The buyers are out and rocking and rolling. The big thing with the buyers I'm seeing, though, is that they're conscious of what's going on. They're smart. They're savvy. It's not they're not running in and throwing offers on anything.
Yeah.
You're showing people 8, 10, 12, 15 properties before they make an offer because there is the inventory there.
Yeah.
But for the people that are saying that it's a buyer's market, no. And Sean showed us the stats. We're smack dab in the middle of a balanced market. It's a typical Ottawa market.
Yeah.
And it's nice. To be quite honest, it's nice. It's good. Sellers are still making their money on their homes. We haven't come down. We've come down a little bit from COVID, but they're still doing normal stuff.
But like Frank said, like if you owned your home from before COVID.
Exactly. When Frank said that I wanted to jump in.
As long as your mind frame is good, though, because again, some people are still thinking their house is worth what it was worth.
That's the problem we're dealing with sellers. We're dealing with sellers. A little bit of that problem is that people that thought their place was worth $950, it's not.
In 21, it was.
It was exactly. Yeah, now it's worth $850, $860, but there's still.
But they bought it in 2020 for $725
or less, $650,
so,
right?
Like it's. Yeah,
and that's the thing that we're seeing, and that's the challenge in this market right now is talking to the sellers and being able to try and price it accordingly, because buyers are savvy, they know what's going on, and if you're trying to price the home, let's try the market out.
Doesn't work. The market.
No, it doesn't.
If you're a homeowner and you want to buy another home, stop wasting time with trying to time the market. Because if you're going to get top dollar, you got to realize you're going to pay top dollar for the one you buy. If you're not going to get top dollar, you're also going to get a deal on the one you buy. So it's going to work itself out. But if you're trying to figure out when, let's see, if I can sell when I get top dollar, but then I'm going to buy when it's a rock bottom, that is almost impossible.
Well, that's exactly what we say. If you sell your home, we'll use COVID for example.
Yeah.
Multiple offers, it was listed at $950, you sold it for 1.1, 1.2, and you got to go buy something in the same market.
Yeah.
Well, you're doing the same thing. You're just losing all that money going and buying in the same market. Right now, it's nice and balanced.
Right.
People have got their gains.
Yeah.
They're getting good buck for their house, and they're going and being able to negotiate and do financing, inspection conditions, those things that people want to do when they're buying a home to make sure that they're safe and they feel insulated. It's a good market.
It's a big purchase. You should be
exactly, and it was because in COVID it was nuts. Yeah. Like I couldn't imagine. Even me myself dealing with clients, I couldn't believe when people were buying homes. 150
it ruined real estate. It really did. Like across the country in Toronto, they're still
absolutely.
What people paid for condos, and now they're lucky if they can get
condo market's tough right now.
70% of what they paid for it, and it's disappointing. But at the end of the day, that's market conditions. I hated the fact that was happening, and I hated the fact that people were buying without home inspections. That drove me nuts.
Well, we'd fire somebody like Frank an offer, and it's like, hey, it's firm.
Yeah, it's firm.
Get this approved. Get this approved. And then, I'm looking at Frank right now. Dinner plate eyes, right? It's like, okay. What if I can't? Yeah,
I know this is radio, but I don't know that I've ever seen Frank's eyes so big as that moment.
No, because it's listed at $799. They paid $950. It's like you only have 5% down. If the lender comes back or the default insurer comes back and says, yeah, they overpaid for this property, we got lucky. We didn't get caught in it.
We were okay.
We got very lucky that the default insurers just went with it and the lenders went with it. But if they had been as strict as they are today, no way. Like you would have had to come up with the extra down payment,
and
which they didn't have the money for. But now you're firm.
That's what I wanted to ask you, Frank. People didn't understand. It was to explain to them. It's like, hey, if the appraisal comes back and it's not.
We saw with the builders. So again, on resales, we didn't see it. It's the builders that got hit the hardest because if somebody bought in 2021 when the builders were able to sell them for more, but the house wasn't ready till 2023, the end of 23, well, they bought for $800. Now all of a sudden, the bank is doing the appraisal, even though they approved them on an $800,000 purchase, but their writing clearly states it's the lower of purchase price or appraised value. The appraisal now comes in at $700. You got to come up with another $100,000.
$100,000.
And I got calls from clients saying, "Well, I don't have an extra $100,000." Well, you better make a deal with the builder. And there's people that walked away from their $50,000, $60,000, $70,000 deposits with builders.
Oh yeah, no, absolutely. I'm sure.
And they just did, but
Well, so it's funny, we chatted a second ago about the condo market in Toronto, which I know doesn't affect here as much, but I know there a lot of pre-construction is coming back now, that exact appraisal thing where people bought in 21, those condos are finishing now, those buildings.
Yep.
So what happened? Are people losing their deposits?
They're either going to have to give up their deposits or they're going to have to make a deal with the builder of some sort. I talked to a couple of clients that their builder agreed to do a second mortgage to cover the shortfall that the bank wasn't going to do. And again, as long as you qualify, because the bank has the right to say, no, we're doing it as a first, and you can't have anybody behind you.
Right.
So you got to be careful. And I think, it's unfortunate, but anytime you buy something that has an elongated closing date that goes above the 4, 5, 6 months, the worry that you need to have is the fact that your mortgage approval could be intact now, but as you get closer to your closing date,
a lot of things can happen.
If the values change, if the property values change, you could be at risk of having to increase your down payment significantly if values of that property were to come down, market evaluations were to come down.
So no, but what happened in COVID, that was
an
anomaly, right?
It was. When you saw the charts that Sean put up, it was a spike that you'd never seen before.
Right.
It was a spike that you had never seen before.
Yeah, you look at the 60 years of data charts, there's one giant spike.
There's an absolute cliff. Yeah. And then it came back, and that's what I try and tell my clients. COVID wasn't the whole thing.
Yeah.
The market's still done very, very well. We just had one blip on the radar, and it was because of the global pandemic, and that's just the way it goes, right?
Yeah, and I'd like to say that if it happened again, we're prepared for it, that I don't think the same thing will happen. This was just a once-in-a-lifetime, probably in our lifetimes, that something like that happened.
None of us had experienced anything like that.
We didn't see it, and now I think we're better prepared for it, that the next time it happens, I think the market won't go as crazy buying homes during a pandemic.
Yeah, for sure. Have a question, head over to realestateandmortgageshow.com, and you can submit it there, or give us a call at 521-TALK, 521-8255. We'll be right back.